All right, the highlight for Tuesday, December the 3rd, has to do a lot with patterns, but also when are you wrong in what your predictions might be, what your opinions might be, what your probability biases might be. It's important because I have in the room them all the time. That's one of the values of the room, is to give people an objective sense of what's going on real time and avoid missing a lot. And the whole key to this business is missing less. We're always working on missing less. The obvious things are missed a lot by people who aren't in a good room or a good community. And then there's also micro things that are missed. But let's just look at this right now. I thought this to be a pretty decent rally from this bottom of this arrow eventually to what was near the open of today's session. Now this happened around 9:45 Central. Before it started to come off in here, I thought there was a chance they could rotate a little bit and then head to 87, 88. Now, when it started to come off, and now Trump was giving a press conference, so it had a little bit to do with some of his beating up on Huawei at the time and China during those comments. But when this retracement, and let's just look at this two ways. This is the rally and this is the pullback. When this retracement down in here started to get too deep from this rally, meaning it came in below 50% of it, then I'm thinking, if this rally was that strong, why is it being retraced this much, this quick? And it's not even like there's a ground zero, because it's not a news event that started this rally, just strength. And so at this point in here, begin to say to the room, that bullishness of going to 88, you're going to have to file that down. And if you had horns, you got to take them off. Does that mean you're going to predict and catch this move straight down? No, but it strips out the randomness that because this pullback came so deep, that this is now more likely. And you have to at least temporarily stop being so bullish. And then what we had as far as a pattern goes was this one, which was interesting, that happened, and I'll put a highlight on it. This is a consolidation box right in here. Let me redraw that. Right in here. And all of a sudden, the market starts to head fake like it's going to go up, and then it comes back down. Right in here, I had said 77 gets below there, it could be a downside move. And it was, and this was a head fake. And the reason why 77 was a price, again, not arbitrary, not just pulled out of nowhere, it's the center of this yellow box, and the center of it matters. As soon as they got through it, 77 even, the downside was the right side. Now, it didn't go down a ton, but it did go down about 4 points. Then as it chops around, 77 was still important. And I talked to people that as soon as we get above those swing highs as it chops sideways, this was possible. And again, it was. So you got to follow like what could happen based on where other people are stuck the wrong way and what has surprised people. This one surprised bulls by coming in too deep, so the downside transition. This one had long stuck probably in there, had short squeezed out, so it was easier to go down as it went through that box. The 77 even was important, so once it got through that area, it released to the upside, and you were bullish for that period of time, whether you were long or not. Then as you start to take out this swing low in here, downside's the right side, and you can now put yourself in a position to say, well, what do you think at this point? I think that the 84 even area, which is where we opened, has held as overhead resistance. I think once they get above there, they're going to find something in the upper 80s and 90s to go to. That's if we get it back up to 84, 83 even. All right. I look at this as being the rally and this being the pullback. It held on to a little bit of that swing low. You start to move below 76, they're going to attack and get through 74, because this now starts to become a little too deep against this rally. There's a lot more involved in reading charts and patterns than how I'm simplifying it now. You can't look at a rally from too long ago and say, oh, this is the rally and this is the retracement. You like to have a retracement that's pretty close to the rally. So if you get a rally here, it's like this first pullback, not one that came hours and hours later off a rally. But there's a relationship between the move and the pullback. And I want people to understand that as it begins to help strip out randomness and create probabilities of direction, and everything comes back to where other people are stuck, nervous, worried as to what might happen. And today, big influx of volatility, volume, range, because of Trump's overnight comments that, hey, we don't have to make a deal till maybe after 2020. The market's repricing itself and taking a phase one deal maybe off the table, delaying the December 15th tariffs off the table. And now the next part that you don't want to miss is if there's a positive comment that comes down maybe in an hour, maybe in a day, maybe in a week, that delays the December 15th tariffs, that maybe has a signature date for the phase one deal. Something to turn the negativity, which is what we're in now for U.S. China trade, into positive. We've been going back and forth for the better part of 2 years now with U.S. China trade. It's been a driver. It's stayed in the driver's seat for a long, long time. And so with Trump's comments overnight saying that we might not have anything until after 2020 created uncertainty, and they started to price out the expectation of having the deal. Know what the driver is, know your patterns, know retracements, how deep or shallow they are against the move it relates to. And you'll put yourself in a better position to create probability instead of randomness to what could and should happen next. And most importantly, be good at being wrong. I have no problem when we came in here and the market was bullish here, and then when this pullback here started to get too deep for me to say, if you're bullish, you shouldn't be. You got to be good at being wrong. If you're not, you're going to have an unhappy marriage with market.